Hello everyone and welcome to this presentation on new and advanced ways to trade with Bollinger Bands. Welcome, thanks for attending today. My name is Primo. I am the president and founder of Specialist Trading. And if you are unfamiliar with our website or with what we do at Specialist Trading, let me explain that we are first and foremost an educational company. It's our philosophy that the reason why most traders fail, upwards of 80% of all traders, the reason they're failing is because they're relying on faulty information, and also they're relying on someone or something to tell them what to trade, how to trade, when to trade. We want to put the power back in your hands, so we provide you and supply you with the information that I've accumulated in my 38 years of trading. I started trading my career on the floor of the Pacific Stock Exchange. This was in roughly 38 years ago. I was on the floor for a total of 16 years, and 9 of them I was a specialist. That's where you get the name Specialist Trading. I've seen and traded just about every market environment imaginable. I traded through the crash of 1987 and the bull market that followed, so I know what works in terms of consistency and what doesn't. So roughly 7 years ago, I teamed up with Pro Trader Strategies, and we market and promote everything that I have accumulated and teach and mentor my students so that they can ultimately empower themselves and make their own trading decisions. Now today I'm going to show you a great strategy that you can start using as early as today if you'd like to start trading with Bollinger Bands. But before we begin, I ask that you please take a moment to view our disclaimer. We are required to show you this. I'm going to show you a lot of performance results using and applying this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view the disclaimer once again, I would also like to invite each and every one of you, if you haven't started already, to follow us on Twitter. There is our handle right there, abbreviation for Specialist Trading, at SPCLST. TRADG. You may want to write that down in order to follow us. I post daily information on our Twitter page, and anywhere from daily financial wisdom to actual current signals that we're in the market. So lots of short but brief information to get from us on a daily basis. Now, if you'd like more detailed information, such as videos and a lot more information about what we do and what we teach in some of our courses, then Pro Trader Strategies, our sister site, has put together a Facebook page for us. So you can also follow us and like us on Facebook as well. So lots of ways to get information about what we do and how to become a member of Specialist Trading. All right, so remember, once again, we are an educational company, so I'm going to be teaching you. In fact, I'm going to be teaching you today. So if this is a classroom, I would please ask that you wait till the very end to ask any questions. I know a lot of you attend presentations, webinars where the presenter likes to take questions. I'm the opposite. I like to wait till the very end. And in fact, I have a little box here in the right-hand GoToWebinar column page here that I have to open up in order to see your questions. So I won't even see them until the very end of the presentation, which will be in about 20-30 minutes from now. So if you have a question, just kindly remember it, and we'll get to it in the next 20 or 30 minutes. Okay, the one question I will answer is the most popular question that I get each and every time, is this being recorded? Yes, it is. We record all of our presentations. So if you have to leave early, or if you're having technical difficulties on your computer, you can go to Pro Trader Strategies and request a link to this particular presentation. All right. So let's begin, and here's what you're going to learn today. Once again, this is a classroom. I'm going to show you the common uses of Bollinger Bands. Bollinger Bands are a great indicator. I'm going to show you how they're commonly used. But then we're going to kick it up a notch and show you some proprietary settings that we employ with the Bollinger Bands. Now, with these proprietary settings, I'm going to show you how it makes up strategy number 3A. This is the strategy I'm going to be sharing with you today. Usually we reserve this for members of Specialist Trading, but I'm going to give you all the rules in their entirety today. So you'll be able to start trading it in just about an hour if you like. All right, so let's review, starting off with Bollinger Bands. Once again, just let me say it one last time. If you have any questions, just wait till the very end of the class to ask questions, and then we'll go over everything. All right, brief review here of Bollinger Bands. First of all, Bollinger Bands are a great tool. They're a great indicator. We have nothing against Bollinger Bands. We just use them in a different way. But let me show you, the most common ways of using them. First of all, here is the standard definition. Bollinger Bands consist of a center line, which is just basically a moving average, and 2 price channels. These are the bands above and below it. So you have a total of 3 different lines or 3 different bands. Now, when the markets become more volatile or there's a lot more action, the bands widen or they move further away from the midline or the moving average. Now, during less volatile periods, when there's not a lot of action going on in the market, the bands will contract, or in other words, they'll move closer to the midline or the moving average, which is in the middle. Now, the tightening of these bands is often used by technical traders as an early indication that volatility is about to increase sharply. So when you see the bands tighten, in other words, when the top band is headed lower and the bottom band is headed higher, and you have this kind of contraction, that's basically telling you that pretty soon there's going to be a lot of movement within the market, a lot more volatility. Now, if we look at these older charts here, or first of all, we can look at the settings. Now, these are the standard default settings for Bollinger Bands. The moving average, which is the middle line, the middle band, is usually set at 20. Now, the upper band deviation and the lower band deviation is +2 and -2. Now, don't ask me to go into all the explanation. That's just the setting, how far the distance is from that middle line. So it's going to be the same for the upper band, except on a positive reference, and a negative reference for the lower band. So this is what it looks like. If we look at these older charts, we see here that on the standard chart, we have the Bollinger Bands plotted, 3 bands. And when you have this contraction take place where the top band is headed lower and the bottom is headed higher, you have this contraction, volatility usually returns. In this case, it went to the upside. Now, conversely, we can do the opposite. As we see here, when the top band is headed lower, the bottom one is heading higher, you have this contraction. Well, look at this, volatility resumes to the downside. Okay, that is the standard use, very common and very good way to trade with Bollinger Bands. Only trouble is it's a little bit too subjective, or a little bit too up in the air. In other words, which way is volatility going to happen? Which way is the trend going to flow? Should we get long or should we get short? It's just basically telling us that we're going to have movement. So we want things a little bit more cut and dry. We want to know, should we get long? Should we get short? Where do we get long? Where do we get short? So I'm going to be introducing to you and teaching you strategy number 3A. This is one of our premier strategies for using the Bollinger Bands. I'm going to teach you in its entirety today. Here are the highlights of this particular strategy. It is a continuation strategy. So what does that mean? Well, it means that we're looking for a trend to be established. And once that trend is established according to our parameters, we're waiting for some type of pause. And then once we see it continue, we're jumping on board, because due to our proprietary settings with the Bollinger Bands, it should continue much, much stronger in that same direction. So we use a unique Bollinger Band setting. We're not going to use the same standard default that I shared with you just a few minutes ago. This is designed to trade quick, powerful trends, okay? Now, obviously, if you're an intraday trader, you're going to get a lot more signals, because you'll see 2 or 3 of these happen a day, depending on what time frame you're looking at. Obviously, if you trade weekly bars, you'll see maybe 1 a month. It all depends on the time frame you're looking for. But as always, we tell our students, regardless if you're a member or if you're attending a free webinar, to learn the strategies first. So please paper trade. Even though you'll get the rules entirely today to this powerful strategy, we really don't want you to jump in both feet first and start trading with real capital. Please paper trade this first. That way you'll really understand the consistency and the process behind this strategy. Our edge at specialist trading is not for home runs. We're not looking for home runs, even though that may happen every once in a while. It's not our goal to get large gains. Our goal is to have consistency within our trading. 2 steps forward, 1 step back, because we know every once in a while we may hit a snag and we may go into a small series of losses. That's okay. It's perfectly normal. As long as our technique or our strategy is consistent, we'll be able to bounce back. The trouble is, most techniques aren't consistent. Most techniques, you hit these big home runs, and then the next series of trades, you lose everything and give it all back. I'm sure a lot of you know exactly what that's like. You're probably going through that right now. We don't want techniques like that. We want techniques, once again, that are 2 steps forward, 1 step back. If we happen to hit a home run, well, that's great, but that's not what we're looking for. All right, so here are the indicators we're going to be using. Once again, you can write these down if you like, but this is being recorded. Everyone will get a link to this recording if you request it. All right, we're going to be using a 50-period simple moving average. All right, so it doesn't matter whether you're applying this to 5-minute charts, tick charts, or weekly charts. You always plot a 50-period simple moving average. And then we're going to use the Bollinger Bands, but we're going to apply our proprietary setting. All right, so here's the difference. we're going to keep the moving average the same. That's the midline. We're going to keep that at 20. Nothing's going to change there. All we're changing is the upper band deviation and the lower band deviation. Where before it was +2 and -2, well, now we're changing it to 0.382 and -0.382. That's it. There's nothing mystical about this, and there's nothing magical. I know some of you may say, oh, that's Fibonacci. Oh, there must be something that goes all the way back in time or something. No, it's just over time, my mentors gave me this setting. It worked well with them. If there's something magical, that's great. We haven't seen it, but the only reason we're using this is because it really works well and smooths out the band settings. And I'm going to show you exactly what to look for. But that's it. If you're having trouble applying these or implementing it, contact the tech support of your charting software program. They should be able to help you set this up, okay? So just remember, the upper band deviation changed from +2 to -2. That's the standard setting. We're just going to 0.382 and -0.382. So here is your standard setting. If we have an older chart of Facebook here, here's the way we're looking at the standard settings for the Bollinger Bands. As you see there, you see them contracting, you see them widening out. Once we change to our proprietary setting, your Bollinger Bands on the same chart should look like this. You see how much more smoother they are and how they're following a trend. This is going to help us decide when to get in, when to get out, and where the trend is. Okay, step one, we're going to go through a step-by-step process, so it's very simple to understand. Step one, if we're going long, our entry price must be above the 50-period simple moving average. So ideally, especially while you're learning this strategy, you'd like to see the majority of prices above the 50-period moving average, as you see right here. But remember, I will show you some more advanced setups where all that matters is that your entry is above the 50-period moving average. So, if you're taking the rule for what it is, your entry, if you're going long, must be above that 50-period moving average. And if you're going short, it must obviously be below it. Step two. Now we're going to look to buy when 5 consecutive price bars. Doesn't matter if these are candlestick or open, high, low, close. It doesn't matter. It just matters when the bar closes on or above that highest Bollinger Band, and then create a pivot high. This is going to be labeled the setup. We're not going to just buy at the market, but this is the setup we're looking for. Now, if you're not sure what a pivot high is, a pivot high looks something like this. Now, this is an ideal scenario where you have 5 bars. You have a high followed by a higher high, then a highest high, and then followed by lower highs. You create this type of an arrowhead. That's a pivot high. So we want to see 5 bars. They don't have to be in this pivot high, but just 5 bars close above that highest Bollinger Band, and then we want to look for this type of formation. It could be within those 5 bars, or it could be 5 or 10 bars later, just as long as we're above the highest Bollinger Band. So if we look at the scenario once again, we have 1, 2, 3, 4, 5 bars closing above the highest Bollinger Band, and we created this little pivot high. See that? All right, let's go to step 3. Now we're going to enter the buy when price trades 1 tick above that little short-term high, that little arrowhead. But here's the one caveat. If the price bar closes below the highest Bollinger Band before you enter, then negate the trade. So in other words, if before we enter 1 tick above that short-term high, price sells off and closes below that highest Bollinger Band, all bets are off. We have to look for another setup, within the remaining time that's left. The reason is because we're looking to catch this momentum. We're looking to catch a trend. And if price comes all the way back before we enter and closes below that Bollinger Band, well then, maybe the trend has dissipated and ended. So we don't want to get involved. We only want to, remember, this is a continuation type of trade. So we want to continue with a strong trend. So if we see here, here's our setup. We haven't entered yet, and we're going to enter if we trade above, which we did right here. So that was our entry. Now remember, if we had never traded above this high and sold off and closed below, well then the trade is negated and we're not doing anything. But we traded above, we stayed above the highest Bollinger Band, and we traded above, so we have entered into this trade. Now, for this example, we're looking at a 5-minute E-mini chart, but it doesn't matter. It could be a stock, it could be a currency pair, and I'm going to show you a lot of examples in all different markets. So don't feel that this is just solely for the E-minis. Now, once that we're in, we're going to place our protective stop below the lowest short-term low prior to entry. So whatever the lowest low was prior to entry, that's where we place our stop. So as you can see here, we entered here, and here was the low right here prior to entry. We had a low followed by a lower low and then a higher low. So we created this little short-term pivot low here. So that's where we place our stop. All right, now here comes our exit. Now this is where people get confused. They think it's a little bit too confusing. It's not difficult at all. We're going to sell or exit on a range extension of 200 and or 300%. So what does that mean? A lot of people aren't familiar with range extensions. Extremely simple. It's much simpler than it sounds. The range extension is just the very high of where that pivot high was. Remember, we created this little arrowhead here. That's the high. And this is the low, where, in other words, where the rally started. We were kind of basically going sideways, and then the rally started right here. So that is 100%. That's our range. Now, in order to exit, we're going to simply take whatever range that is. In other words, take the amount of points and then simply double it. That gives us 200%. So that's where we'll exit. We can either exit there, or if we want to try and squeeze some more gain out of this, we'll add that same amount of points again to give us 300. Now, had we taken the full 300 exit, we would have made 11 points, or roughly $550 in just a couple of hours using this simple technique at the end of the day. Okay, you see how simple this is, and that's it. Now, there's a number of ways to manage your trade. Some of our students like to, once they get up to 200, they will move their stop to unchanged. And then once they get up to 300, they'll exit the entire position. Other traders like to trade multiple lots. So they'll trade, let's say you had 2 contracts. Well, once you get up to 200, you'll sell 1 contract, and then you'll move your stop up to unchanged. Once you get up to 300, then you'll sell the remaining contract. There are lots of different ways to trade this. That's why we only teach and trade strategies, because strategies give you different ways, different scenarios in which to trade. You see, a system says that you have to trade it the same way each and every time. We don't believe in systems. We believe that you have to shift with the ebb and flows of the market. Okay, a lot of times you'll see something that reminds you, gives you insight of a prior environment, and so you'll say, you know what, I'm getting out at 200%. It doesn't, we're running out of gas. All right, that's your insight. Whereas at other times you may see an extremely strong market. Perhaps some news came out. Perhaps there's just a lot of volatility in the markets, and you'll say, you know what, I'm going for 300. I'm going for the full 300 exit. So that's why we allow up to 25% discretion. So there's no back testing. None of our strategies or techniques have back testing or research, because everyone trades them differently. We can have 2 different traders have the same setup as you'd see here with entirely different results. So we're not a systematic or research company. We don't believe in stats. That's why we're required to show you our disclaimer. That's why everyone's required, because so many people come up with stats going back 10, 20 years, and they don't work. They pan out ultimately. So that's why you have to always give a disclaimer. Well, we believe that you should become a part of the process. That's why we want to give you this information, and then you empower yourself. You make your own decision where you want to exit, where you want to place your stop, even where you want to enter sometimes as well. We go over all of this in our courses as well. All right, so that basically is the strategy. Let me show you some more examples just so that you really fully understand it. Okay, that was just the format. Okay, and remember, if you have any questions, kindly hold off. That's just the format for now. But what we want to do is we want to show you a lot of different scenarios so that you'll ultimately be able to spot these on your own. And remember, they're very, very easy to spot. We want you, once again, our whole goal is not to provide you just with buy and sell signals and say, here are the stocks you should trade, or here are the futures you should trade, and go buy at these prices. Okay, that automatically takes you out of the game, and that, in our opinion, is the reason why most traders fail. We don't want to just simply provide this information for you. We want you to learn how to see it and then go find it on your own. That's how my mentors taught me, and this is what turned my trading around. I struggled for a couple of years before I was able to become consistent, and this is what I instill and teach all of my students. All right, so let's start out with stocks for all you stock traders. Let's look at BCR. This is going back to mid-July, just about 2 or 3 weeks ago. We have the Bollinger Band, and for all intents and purposes, the majority of price is above the 50-period moving average. So most likely we're going to be going long, all right? Now we're looking for 5 bars that close above, consistently above. All right, now we had 5 bars close above here, but then we close back below. Remember, once we close below the highest Bollinger Band, everything's off again. We have 1 close above, then we close below, 2 below, but we have 1, 2, 3, 4, 5 consistent closes above. See that? And we didn't close below here. And then as well, we located this little short-term top. So we have a valid setup to go long strategy number 3A, but we must trade right here. This is where we're going to enter. You see, we can't enter until we go above that little short-term high. So on the very next bar, well, we gapped up in BCR. This was on the 27th, I believe, just 2 weeks ago. And so unfortunately, you would have had to purchase on the gap up, but that's okay. You would have purchased here at 182.10. Here's where your stop is, okay, below the last previous low. And now we just simply want to measure from the top of that range to where the rally started. And that's 100%, okay? So we have our stop in place. We've entered right here. Now we simply measure the number of points and double it, and this is our first exit. We can decide to exit everything here. We can take a quick 8-point gain in just a couple of days, or we can move our stop to unchanged, or if we have multiple lots, we can sell part of our position here, or we can wait for 300. We simply take the same amount of points. Now we add them one more time, and that's where we would exit. And roughly in a couple of weeks, just using this simple technique without the aid of any news, without any complex indicators, without going to any chat room or listening to some trading guru tell you what to buy or sell, you did it on your own by just looking at this simple strategy. Could have made 19 points in just a couple of weeks. Now we realize this is an expensive $200 stock, but you could have easily just applied the options to this. You could have purchased options. And so there's lots of ways to trade it. Once again, that's why we don't have stats or scans, because everyone has a different way for trading these techniques. Now we go to Grub, G-R-U-B. Now this is once again in the middle of June, just a month or so ago. Where's price in relation to the 50-period moving average? Price is below. So are we going to try and buy anything? Well, remember, we can only buy if our entry is above the 50. It doesn't look like the price is going to be above the 50 anytime soon. So most likely we're going to be looking only to short. You see how that simple rule will keep you on the right side of the market. So since we're looking to short, we want to see 5 consecutive closes below this lowest Bollinger Band. Okay, now we have 5 closes here, but then we close back above, so all bets are off. But now we have 5 right here. Okay, and we haven't gone back above. Now we look for that little short-term pivot low, which is right here. We have a low, followed by a lower low and a higher low. So this is our little point of entry. If we trade below here, before we close above that lowest Bollinger Band, we're going to enter. And as you can see, we did on the very next bar. So here's our entry point at 36.72 to go short. We place our stop above the last short-term high. And then we simply measure where the sell-off started to where that short-term low was. This is 100%, okay? So we measure the amount of points, and then we simply subtract it. This gives us 200%, and you would have shorted at 36.72, and a week or two later covered down about 4.5 points. Okay? Once again, all because we are in sync with the market, we're in sync with the trend, and we're just using this continuation method. Now, EA, this is going back to May, and let me show you how many times you have to start the count off over again. Here we have 5 closes above the highest Bollinger Band, above the 50-period moving average. So we're all set to go long, but look what price did. Price comes all the way back and closes below. So we negate that setup. Now, even though we went higher, that's okay. We can always get back in at a higher setup. It's all right. So now we negate the setup, and we have 2 closes below, but now we have another 5 closes above. Okay? So we're back in the game, and we find the little short-term high right here. So we can go long EA if we trade right here at this level before we close back down below that highest Bollinger Band. And guess what? We went there on the very next bar. So our entry was at 63.25. We place our stop just right here below the lowest low. I believe that was the lowest low. And we measure 100, 200, 300. And as you can see, it took a little while for this to take off, but ultimately you would have had an 11-point gain if you exited at the 300 range extension. Here's the good thing about getting out of 300% range extension. As you can see, many times the trend will end right at that 300, as you can see, and that's where the trend started to dissipate. So it's good I would suggest get out at 300, no more than 400. We have some students who say, boy, Steve, there's a great rally. I'm going to use 400, maybe 500. I would suggest no more than 400. Many times, if you wait for 500, you're going to give everything back. We look at win here, this older chart going back to March, where we were originally above the 50-period moving average. We had roughly 5 closes, but then we closed below it. All right, now we have 1, 2, 3, 4, 5 closes, and we create the short-term pivot low. We're below the 50-period, so we could have entered at 140.95. Here's our range extension, 100%. All you do is simply subtract it, and in 3 weeks, 19 points. Okay, once again, we realize an expensive $140 stock, a lot of capital requirements in order to go short. Well, why don't you buy the puts? Buy the 140 puts. Now, this just doesn't work on stocks. Here's a current chart of crude oil going into the beginning of August. All right, now crude oil was flirting with the 50-period moving average line, and it was kind of oscillating above and below these Bollinger Bands. But right here, we had 5 consecutive closes below the lowest Bollinger Band. Okay. And we're looking for that short-term low, which was right here. Remember, just because we have 5 closes does not mean the short-term low is going to happen anytime soon. You may have to wait. So here's the short-term low. We can go short if we trade below, which we did. Now, our stop was not all the way up here. Our stop was right here. So we had a nice risk-reward ratio. I know a lot of people always say, well, Steve, what are the statistics going back 10 years on the risk-reward ratio? What are the worst-case scenario drawdowns? Remember, we do not keep stats on any of our techniques because we don't believe in statistics. We think that you should apply your own personality to the strategy. So we would suggest placing our stop right here, and if that meets your personal risk-reward ratio, well then fine. You could have used this trade and gone short. You're risking basically an entry of right here at roughly 50.89 and risking about 3 points to basically make about 11 or 12 points to the downside. Now the trade is still in play, as you can see here. We have not reached the entry point, but if you're thinking about crude oil and if you're thinking about buying it, I would suggest against it. First of all, we don't buy anything that's below the 50-period moving average. And then secondly, we have a very nice trade in play here right now that should go down to the 39.90 or at least 40 level. So that's where we want to be covering crude oil. All right, so we looked at stocks, we looked at commodities. Let's look at the S&P 500, the mini S&P. All right, here's a 60-minute chart going back to July, the first or second week of July. The 50-period moving average, we're above, and we're above 5 counts on the Bollinger Bands. These are hourly charts. And as well, we have a short-term top. So we have all the right conditions to go long, but we have to trade above. We have to trade right here. All right. So we see that on the very next hourly bar, we traded there. So you would have entered at 20.72.75, place your stop about 20.60. So you're roughly risking 12 or 13 points or $600, $700 per contract. You measure where the rally started. Here's 100%. And then you simply double it. And you risked about 13 points to make 32, nearly 33 points in just a couple of days. Okay. Now that's a 60-minute chart. We realize not everyone holds positions overnight, so let's look at a 10-minute time frame. All right, this was on the 6th of August. This was just last Thursday, about a week ago. We are below the 50-period moving average, but we're oscillating from below to within the Bollinger Bands. But now we have 5 consecutive closes, 1, 2, 3, 4, 5, where we're below the lowest band. And we create this short-term pivot low right here. So this is our entry point at 2084.50. Unfortunately, our stop is way up here, so if you couldn't take that, roughly about 13 points, that's all right. But we show you ways on how to track the trade and lower your stop once you're in a profitable trade. And as you can see here, in roughly about an hour or two, you would have made 13 points or $650 per contract. Now, just to show you that we're not cherry picking the best trades, this happened yesterday. We all remember that the market gapped down yesterday, sold off, and then had this nice rally. A lot of people were calling for some type of reversal pattern. A lot of people said, boy, that rally caught me off guard. I didn't know we were going to be that strong. Some people who are not members of our courses, obviously, but some people, traders I know, said, boy, I lost a lot of money yesterday shorting into that, and it kept going higher and higher. A lot of people said, boy, I missed the thing entirely because I just didn't know we were going to bounce like that. How could we have taken advantage of that rally yesterday if we're short-term traders? All right, well, very simple. Here's a 5-minute chart at roughly starting at 9 o'clock Pacific time. We're located on the West Coast, so as you can see, coming into 9 o'clock, we were below the 50-period moving average. Now, at this point right here, we have 5 consecutive closes above the 50-period moving, above the highest Bollinger Band. Even though price is still below the moving average, we want to find 5 closes that are above the highest Bollinger Band. Now, once that has happened, then we look for a short-term top. Here's our short-term top. See that right here? And guess what? It's above the 50-period moving average. So this is a valid setup. It would have been a valid setup roughly about 9:50, 10 o'clock Pacific time yesterday to go long right here. But we had to trade here before we sold off and closed back down. So let's see what happened. Well, the very next bar, we traded there at 265. Now, you could have placed your stop down here at 250. That's risking a lot. That's 15 points. But if you wanted to, we show you ways in which to raise your stop once the trade is going your way. So you've entered here, place your stop, and now you just measure the range from where the rally started to where that short-term high was. That's 100%. And here's 200 right here. So as we see, we would have entered at 2065, and just about 2 or 3 hours later, we would have exited at 2079.75 for a nearly 15-point gain in just a couple of hours, or roughly $750 per contract. And if you had wanted to even stay in longer, hoping you'd get the 300, you could have stayed to the very end of the day and exited on the close towards the very high. So this happened less than 24 hours ago, just to show you how commonplace these setups happen. You're going to see them happen a lot with intraday trading. You'll see them happen less as you go out further out in time frames. And then lastly, let's look at the Forex markets, because it just doesn't work on those two markets. We can apply this to anything. Here's a weekly chart of the Swiss franc. Now, this is an older chart, but I'm showing you this for specific purposes. We're initially below the 50-period moving average. But we have 5 closes, 1, 2, 3, 4, 5 closes above the above the highest Bollinger Band, and we create a short-term high which is just barely above the 50. So if we entered, we would be entering right here above the 50 period, and that's valid. So in August of last year, you would have entered at 90.36, place your stop down here, and then you simply measure the range extension. Here's 100%. Now let's say you had thought there was going to be a tremendous move in the Swiss franc on a weekly time frame. Okay, you would have measured 400. Remember, our rule of thumb is, exit at 200 or 300%. It's up to you. Go no further than 400%, because many times that's where the trend will change, have an abrupt change. So you don't want to risk a lot of profit that you may have accumulated. Look what happened. Okay, 1,000 pips in the next 6 or so months. And had you exited at the 400% range, that would have been a very good idea, because look what happened here. Okay, it came all the way back down. This is why we always recommend exiting at the 400% at the very most. Okay, especially when you're beginning, we just take 200 and 300%. Now that was on a weekly time frame. So we've shown you every market, every time frame, commodities, futures, stocks, currency pairs. Let's recap before we go to question and answer. Remember, this is a continuation strategy. We were looking for a trend to be established by using our unique Bollinger Band setting. Once that trend was established, we had a particular strategy meeting all the requirements that told us that a trend was in place. It was kind of pausing for a while, and then we got back in on the continuation. So you see, it's designed to trade quick, powerful trends. Now, obviously, if you're an intraday trader, you're going to get a lot more signals than if you trade weekly bars. But you'll still, see setups in regardless of market and regardless of time frame. As I stated earlier, this is not a wonder strategy. From time to time, you will have some small losses. So study the strategy first. That means paper trade it. Just like any, career there is, any occupation, people don't just start out, right off the bat. You don't start, if you're in sports, you don't start off in the major leagues right off the bat. You always start at the bottom in minor leagues, practice before a game, always learning before you start the big game, the big picture. It's the same way with trading. paper trade until you really feel comfortable and you know how to implement this strategy. Our edge, once again, is consistency. From time to time, you will have some minor losses, but that's okay. It's perfectly normal. It happens all the time. It's almost like saying that someone has to hit a home run every time they come out to play. It just isn't logical. That doesn't happen. People will strike out, but it's 2 steps forward, 1 step back. Now, in closing, I would like you to ask yourself this, and I want you to ask yourself honestly, do you think any of these edges could have helped your trading this past year? Now, I know that not everyone is going to be a technical trader, and they're going to say, well, Steve, I really don't use Bollinger Bands that way, and I'm not this type of a continuation trader. So I understand not everyone. Remember, we don't teach systems. We want you to become a part of the process. And if you don't feel comfortable trading this method, I don't want you to, because ultimately you'll most likely fail. But even if you could just take one thing away, maybe the settings of the Bollinger Bands could help you. Or how about just using the 50-period moving average? When you apply that simple rule of only going long and entering whatever strategy you're trading, a buy signal above the 50 and only going short a sell signal below the 50, I honestly think you'll increase your odds for success tremendously just by using that one simple technique. Now, here's what we have to offer you for today for all the attendees. We're offering you our strategy number 3 Trend Trader course. This includes more detailed instruction concerning the strategy I just went over, as well as another Bollinger Band strategy, which is based off the same proprietary settings. That's strategy number 3. That's the main course, strategy number 3. And in my opinion, strategy number 3 is a better strategy than the one I just shared with you. In fact, let me show you some recent trade examples that strategy number 3 generated and that our strategy 3 course members were privy to. All right. In Tiffany, we look here, this is going back to the end of July. As you can see here, strategy 3A is different from strategy 3 is different from strategy 3A, the one I just taught you, in that it is a pullback strategy. As you can see here, a buy signal was generated off of this sell-off. Excuse me. This is totally different than a continuation strategy. Remember before, we were looking for something to start a trend and then continuing in that trend. Well, strategy 3 gets you in at much better prices, a lot inexpensive, and you can many times pick these bottoms with the signals that it generates. This was just on the 28th of July. Now, it works to the downside as well. This was on the 21st of July. As you can see here, QCOM was going up, but the strategy deemed that it was just a pullback to the upside, and at the very top, it generated a sell signal, and the stock fell from roughly 65 down to 61 in 2 days. And Netflix, we realized once again, an expensive stock, but you could have purchased options. The stock is basically going sideways to lower, so most people would have said, well, there's no real clear-cut trend here, but according to strategy 3, it generated a buy signal right at the bottom of this short-term sell-off, and you could have purchased it at 94, and the stock was 115 in the next week. Now, this does not only work just with stocks. Here's an hourly chart of the E-mini. All right, this was going back to the 7th of July, about a month or so ago. On this nice little bounce here, most people would have thought, well, we have a rally in place, but strategy number 3 generated a sell signal, and the E-mini fell from 2070 down to 2035, 35 points, roughly about $1,700 per contract in just the next few hours. Now that's on a 60-minute chart. This is a 1,000 tick bar chart last week. Okay, as you can see, we have a nice move to the upside, but then a strong sell-off on this 1,000 tick bar chart. Most people would have thought we're going lower. Strategy 3 generated a buy signal. See how this is different from strategy 3A, the one I just taught you. Strategy 3A would have you looking to buy as it's going up. Strategy 3 has you buying at very low, inexpensive prices and then waiting for the trend to continue. And then lastly, we can use this on the currency pairs, okay? Strategy 3 will work as it did here on this large sell-off on the British pound. Many people thought the British pound was going much, much lower in June. At the very bottom, strategy 3 generated a buy signal, and it went all the way back up coming into July. So this is what we're offering you today, our special attendee discount. You're getting strategy 3A, the full course of what I just taught you, much more detail. We show you exactly how to move your stops, money management, a lot more information provided, more than what I could just share with you in this brief our webinar today, as well as Strategy 3, which is a pullback course, okay? Here's the best thing about this. This includes the add-ons. Now remember, we don't want you to take advantage of this, but this add-on will generate those little up and down arrows or up and down indications when a signal is generated. So we want you to not to use them as a crutch, but to use them as an educational tool so you can just check your work to know when a signal has been generated. But ultimately, we don't want you to rely on them. We want you to learn the process so that you can just spot these on your own. Very simple. In addition, lastly, you have lifetime correspondence with me. Whether it's on one of these strategies or anything you feel about the market, you have a question, you can always contact me and I'll get back to you as soon as possible through email. Now, roughly, if we sold these courses, it would most likely cost you close to $1,300. We're discounting it down today for all the attendees down to $9.95. And the best thing about this discount is that we have payment plans available. So if you can't come up with $9.95 in one lump sum, you can contact the people at Pro Trader Strategies, and what they'll do is put together a payment plan. For a small deposit, you can be up and running and have both of these courses in their entirety. So here's how to access this great discount. You can contact Pro Trader Strategies. You can either email them at trading@protraderstrategies.com or call them directly to set up a payment plan. Remember, for a small deposit, you can be up and running and have both of these strategies. You can call 598-6677. Now, there is the link at the very bottom that you can just access. You have to copy and paste that onto your browser, but if you look at the GoToWebinar column on the right, you'll see under the chat box, we have posted the live link. So if you want to go there and take advantage of that deep discount, you can just click that on right now and it will automatically take you to that sign up page and you'll be up and running just as soon as possible. Okay, so I'm going to leave all this information up here while I answer your questions. Once again, I want to thank you for holding off on any questions, and let me open up that question and answer box and I'll try and backtrack here towards the beginning to answer anything. Okay. Let's see, Irby asks, what was the values of the Bollinger Bands, please? I had trouble logging on. Sure. Remember, the Bollinger Band setting is based off of a moving average. That's the midline, and that is set at 20, and we're going to keep that the same. So the moving average should always be at 20. But what we're changing are the upper deviation and the lower deviation. This is just basically the distance the upper band is away from the middle line and the distance the lower band is away. Where before they were set at +2 and -2, we are reducing that down to +0.382 and -0.382. Now we're not a a technical operational company, so we don't have access to all your charting platforms. So if you have difficulty in editing this and altering these settings, just contact your technical support for your charting software package, and they should be able to set this up for you and tell you exactly how to edit it. Remember, the standard deviation is +0.382 and -0.382. Okay? Lynette asks, in options, is the strike price at the lowest low on short of the highest high strike price to enter the trade? Lynette, that's something to ask for your broker. It all depends on, the broker and the markets they're making. This is not an option course per se, so we don't really have all the information for you. And I don't want to give you any information that, may be faulty or may not ring as true. So I would ask your broker in terms of that, okay? Harold missed the first half, wants to know when the recording will be available. It'll be available probably within the next hour. See the email address in front of you for Pro Trader Strategies. Just contact them and they will send you a link, okay? Kathleen is asking, hello Kathleen, she's asking, just clarifying, you need that little pullback for the pivot high after the 5-period setup. Now, if your 5-period setup is strong and each close higher than the next, you must get a pullback in the 5th day in the highest of the 5. Well, remember, Kathleen, this is a good question. I think what she's saying is that we're looking for that little, it's not a pullback, but it's a pivot high. Let's say you're buying off strategy 3A and you're looking for that pivot high. Remember, the pivot high does not have to be within that first 5 closes above the highest Bollinger Band. The pivot high can be 10 bars later. So the first thing you want to do is just look for 5 closes that are above the highest Bollinger Band. Obviously, you'll do the opposite if you're going short. Now, once you have found those, now you start looking for that short-term pivot high. All right, that's basically a little arrowhead. You have a high followed by a higher high followed by a lower high. You create this kind of upside down V. Now that can be within the first 5, or it can be 10, 20, 30 bars later. We don't know. But that's the first thing you're looking for. Okay? And then once you found that, you're going to buy if price trades above the high of that little pivot high. Now the only caveat is if, let's say you create that pivot high and then price starts to sell off and closes below the highest Bollinger Band, well then the trade is negated. We're not going to trade this anymore. So those are the only rules you need to know. You don't make it more complicated than it is, Kathleen, okay? And thank you, Kathleen. She says the customer service of Pro Trader Strategies is great. Yes, it is. As I stated, I teamed up with Pro Trader Strategies about 5 or 6 years ago, and they have great customer service, so they can help you in setting this up. You remember, with this Bollinger Band course, you're going to get the add-ons. They can help you set that up if you have difficulty. I mean, the add-ons can be with MT4, they can be with TradeStation, NinjaTrader, and MetaStock. So there's lots of ways to use this, okay? Remember, if you're having difficulty in how to set the deviations, contact your tech support. Remember, we're not a tech support company for all different programs. There's just too many charting software programs. They should be able to help you set that up, all right? Tommy asks, how do you know that you were in sync with the market itself? That's a very good question, Tommy. Before we go on to the second part of your question, the easiest way I know to be in sync with the overall market is that 50-period moving average. Remember, people overcomplicate their trading. They overcomplicate it by listening to outside sources, having people tell them what the overall market is doing. All you have to do is apply a 50-period moving average. If you're looking at a 5-minute chart, apply a 50 moving average. If you're looking at a monthly chart, apply a 50-period moving average. You don't need to look at a higher time frame to look at a lower time frame. I know a lot of traders, trust that method and say, that's how I trade. In my 38 years, I've found no consistency in using that method. All it does is keep me out of a lot of trades. So if I'm trading the 5-minute bars, that's the only time frame I look at. And if price is above, then the overall trend is up. That's how I know I'm in sync with the overall trend. If price is below, the overall trend is down. That's how I know I'm in sync. It's that simple. I've often told my students and in my webinars, if I were stranded on a desert island and I could only trade with one tool, it would be the 50-period moving average. That one tool has kept me out of trouble and saved me so much money by getting me on the right side of the market, okay? So that's the first part of your question. Secondly, is there a criteria for the general market before trading long or short? No, there actually is none. I stopped looking at news over 30 years ago, so I don't care what's happening in the news. There's no, if you're trading for the long term in your IRA account, sure, you need to know what's going on in the news. You need to know fundamentally about a stock or what your company is doing. If you're trading, holding on for the next hour or two or maybe a week or two, there's no reason to. Okay, as long as you have these rules in place and you're managing the trade, you're going to have that level of consistency. That's what we strive for. Okay. Sherry asks, how do you determine where the range extension starts and also the stop? Okay, very good question. The range extension, and this is subjective again, remember this is discretionary. It's not, we're not teaching a system, so don't worry. It doesn't have to be cut and dry, like exactly the same place. We don't teach systems. We leave a lot of room for these strategies so that you can decide for yourself. But just basically, if you're going long, if you have a long setup, the bottom of that range extension is where you think the rally started. In other words, if the price was going sideways and then we started to move higher, sharply higher, that's the bottom. And then wherever the top of that pivot high was before you entered, that's your top. So that's 100%. Just reverse it for going lower, okay? It's, and once again, it's not written in stone. Some people like to, will choose a different area. That's okay. It's perfectly admissible. They'll say, well, I thought this was the bottom at the beginning of the rally. That's all right. Many times you'll squeeze extra points by picking that place. It's just a standard low and then going to where that pivot high was, okay? And then the stop, once you enter, you can just place your stop at the previous low, the previous pivot low. That, once again, a pivot low is just a low of a bar followed by a bar that's even lower than that, followed by a bar's low that's higher than that. So you create this kind of a V. That's a pivot low. It's the opposite of a pivot high. And that's where you place your stop. Okay? Let's see. Robert says he doesn't really understand the shape for buy and V shape. A number of questions. Can you trade this strategy for very short-term trading? Can it be used with Heiken Ashi candles? Yeah, I don't use it with Heiken Ashi candles, so I can't give you a definitive answer on that, Robert. But if you're having trouble with this, remember, just go maybe Investopedia and look for the definition, because we don't have enough time here. But a short-term top is just labeled also a pivot high, and a short-term low is a pivot low. Look at this video again. You can request this video and look at the examples I gave you, and it'll give you a better idea. Okay, so I would do that. I would request this video. But if you're asking if this works in short-term trading, I just showed you what happened yesterday. In 2 hours, you could have made 15 points. So if that's not working in short-term trading, I don't know what is. So yes, it works very well. Okay. Mary says, great strategy. Thanks. You're welcome. And remember, this is your strategy to keep. I didn't go in detail. I didn't go into all the nuances. That's in the course. But I gave you the basic format of how you can actually start trading this as early as today if you'd like. But please paper trade it first. But you basically have all the nuts and bolts to this strategy. Now, if you want to learn the real in-depth way of how to trade it and ways to protect yourself even more and track your trades by moving your stop, I would take advantage of that discount today. And as well, you're going to get another great strategy, which, as I stated earlier, in my opinion, is an even better strategy than the one I just shared with you. That's strategy 3. The reason why I think it's better is because you're buying at lower prices and you're selling at higher prices. Much better, in my opinion, than with the actual strategy 3A, which has oftentimes, buying while it's going higher. Greg asks, are there any scans available to find these setups? We don't have any scans once again, but remember, as I think I stated in the opening statements, our goal is to empower you with this information. We don't want you to look for scans. I want you firstly to figure out how to spot it on your own, because more and more traders start to rely on something telling them where there's a setup, where that, you start to give your power away and let something else decide for you. I know a scan won't take and do everything for you, but in the beginning, I want you to find these on your own. When I first learned this some 38 years ago, I started looking through hundreds of charts a night, just trying to get a better idea. So I'm sure if you contact Pro Trader Strategies, they can help you with putting together a scan. But as of right now, I personally don't use scans for this on my own, so I wouldn't know how to answer that. Sherry asks, are there any specific time frames to trade for each entity, E-minis, Forex stocks? That's a good question, Sherry. The answer is no, just whatever ones make you feel the most comfortable. In other words, if you're a position trader, if you like to look and hold positions that last 2 weeks or 3 weeks, well, then you should be looking at daily bars or maybe even weekly bars. All right. If you're a short-term trader and you like to get in and out of the market really quickly, well, then look at 1 or 5 minute charts or maybe even tick charts. It depends on your personality. There is no right or wrong way to trade this. It all depends, because there's going to be setups in any time frame and in any market. It all depends on you deciding how you want to trade. We have traders who will only trade this on like weekly bars because they're position traders, and they wouldn't be caught dead trading it on tick charts because they don't feel comfortable trading that way. And we also have vice versa, traders who only like to trade this on 1 minute bars. And so it's entirely up to you how you decide to trade it. Okay. Okay, let's see. Stephen is saying, even on the smallest of tick or range measurements, well, sure. I mean, I showed you a 1,000 tick bar chart. I don't know if you want to go shorter than that. Just remember, the smaller time frame, the less, chances for a big move, for larger gains. You'll have smaller gains, but your risk will be smaller. But you have all the rules now. Feel free to experiment. Remember, don't look for someone to give you all the answers. You can find out for yourself. Do your research. Do the due diligence on this. You have the rules. You can start looking as early as the next 5 minutes. Go see if it works on a 10 tick chart. It's up to you. Jay asks, if the stock is trading above the 50 period moving average, a candlestick is giving a buy entry signal, but the Bollinger Band is not. What do you do? Well, remember the Bollinger Bands don't give a buy entry signal. The Bollinger Band, I don't understand exactly. You'd have to clarify that a little bit better, Jay, because when you say a candle is given a buy signal, what do you mean by that? It has to be above the 50, and at the same time, you have to have 5 bars that are closing above the highest Bollinger Band. So I'm not sure I understand your question. Rick is asking, how much is this course? Well, you get 2 of these strategies, and you're going to get the deep discount at $9.95, but you have to take action on that very quickly. It usually costs more, closer to $1,300. We're discounting it down to $9.95, and as well for the next couple of days, we're offering payment plans. So if you want to come up with just a small, a small deposit, you can get that discount included in that, but you have to contact Pro Trader Strategies so they can put that together for you. Okay. Zoltan asks, would you use this in a 1-minute chart versus a 5-minute chart? There's no, once again, Zoltan, there's no right or wrong answer. It's up to you. You know, I would say do your research. Go look at it at a 1 minute, go look at a 5 minute. They're going to still both generate strategies. There's no, remember, this is not a system. This is a strategy. So it's up to you to decide how you want to implement it. If you feel comfortable after spending a day or 2 researching it on a 1 minute as opposed to 5, then trade the 1 minute. Remember, I don't want you to rely on someone to give you all the answers. That to me is a recipe for disaster. Trust me, I know what you're going through. I did the same thing when I was struggling. I wanted my mentors on the floor. They were traders themselves. And I said, just tell me what you're buying so I can just kind of piggyback. They said, no, you're not going to learn that way. You're just going to learn how to mimic us. And then when we leave, what are you going to do? So they told me the same thing. They gave me all the information and they said, go do your research. Find out what time frame is best for you. Find out what stocks works best for you. Find out if you want to trade it in futures. And that's how I was ultimately able to turn my trading around. So unfortunately, I'm teaching you the exact same way I was taught, because that, in my opinion, is what will lead you onto that road to consistency. Too many traders fail because they join all these trade rooms and chat rooms and try to copy what people are saying in the rooms, or they listen to someone on TV and try to mimic what they're doing. And trust me, you'll have a lot more consistency in your trading if you find some consistent methods and then just stick with them and trade them yourself. That's what we do at Specialist Trading. We give you the information, we teach and mentor you, and then we want you to make your own decisions. I'm just there with you as a guide, okay? Now, I'm leaving this information up because I really want you to take advantage of that deep discount on these 2 strategies. Usually it's $1,300 for both of these. We're discounting them down to $9.95. And remember, you get all of my lifetime correspondence. So you can contact me anytime you'd like on anything in the course. So if you don't actually get it, or if something isn't making sense, you can always email me and I'll respond as quickly as possible. So any questions concerning that, you are a student of mine. You can contact me for as long as we're both alive, okay? Now, in conclusion, I just want to say thank you so much for attending. This is a great strategy, but as I stated earlier, please paper trade it first. Even people that have purchased a strategy for close to $1,300, we give them the same advice. We say paper trade first, because we want you to understand the process as it unfolds in real time without having to spend any money. Once you really fully understand the process, then you can start off small with some real capital, okay? Remember, there's the link in the chat box. You can click that on live. If you want to get a payment plan set up, you can contact Pro Trader Strategies, and there's the information in front of you. In closing, I want to thank you so much for attending today. I hope you got something out of the information. Remember, we're an educational company. Unlike other presenters and webinars, we like to give you something that you can use each and every week. So even if you don't purchase anything or become a member of Specialist Trading, at least you can use the information we give you. Hopefully, it will elevate your trading. Thank you so much. In closing, I just want to show you one last time our disclaimer. We're required to show you that. Remember, we can in no way guarantee that any of the performance results I share with you will be repeated in the future. And thanks so much again for attending, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you. We'll see you next time. Bye-bye.